quiet start, and then we've been struggling actually to cruise past that 19,700 mark, just about circling around that level. While today the saving grace, of course, has been PSBs, and they, from the word go, have been holding out very well. Besides a few sporadic movers from within the broader end of the market, which we'll just talk about in just a short while from now. But it's really banks and interest rate sensitives which are the ones which are actually holding the ship. So SBI, which has gained about almost 2%, pretty much undoing all of yesterday's damage. Central Bank, Canara Bank, Union Bank, pick up any PSB, and that's where really the gains are concentrated. In fact, autos as well, they've managed to buck the trend too. So you are seeing dots of green on a Maruti, M&M. Of course, M&M, remember, was bank underperformer yesterday, so it's nowhere close to undoing all of the damage from yesterday, but that too is in the green nonetheless as we speak right now, as is the case with Hero MotoCorp too. If you were to talk about what's happening within the broader end of the market, that's still favoring the declines as we speak, at least within the liquid F&O universe. So Glenmark Pharma, for instance, that's down about almost 4%. There's Nokri, there's DRL, Alchem, Zydus Life. So if you were to really map a trend, it's actually pharmaceuticals which are the dragging ones. In fact, many other pharma names as well are in the red as we speak. Even within the Nifty, DRL, of course, is down nearly 3%, but there's Cipla as well, which is down about 1.7%. That's pretty much the case across the board. But Anisha, what about the stock-specific movers?
Well, a lot of stock-specific moves, and largely they're coming in on account of the brokerage views that we have heard. So whether it's a Maruti that you talked about in terms of the city note, talking about a value of almost 13,000 on the stock, IndusInd, UBS was quite positive, and then of course the greed and fear changes that came about. In fact, talking about greed and fear changes, they have added JSW Energy to their long-only portfolio, so that stock is flying away in the trading session. The gain is there almost 6-7% on that stock. You also have SBI, which has been added with a 4% weight. Of course, they've trimmed on the likes of ONGC, HDFC Bank, etc., but it's coming in for the gain of SBI. Separately, it is IndusInd Bank, as we were highlighting earlier. UBS maintains a buy with a target price of 1,800. They say that the earnings quality is likely to further improve from here on, and the focus is on liability mix change and the retail, growth. Retail loan growth as well. So that's something that the stock and these, street is watching out for. Separately, of course, the big news that we are tracking since the start of the trading session, the inclusion of the Indian bonds in the JP Morgan Emerging Market Index. That means, of course, the markets will open up for foreign institutional investors as well. And for primary dealers like PNB Gilts, that's the news coming in. No surprise then that the stock is high around 17%. In fact, we spoke with the management of PNB Gilts earlier to try and understand as to what really would be the impact on their own business, because the stock is now locked in upper circuit. Listen to what the management told us.
This inclusion, the JP Morgan GBI EM diversified 110 inclusion, obviously it is good news for the country, for the bond markets, and what is good news for bond markets is obviously also good news for primary dealers like PNB Gilts. Essentially, that's divided into basically two events. So one was the event today, and the second event will be the actual inclusion, which will start, as you mentioned rightly, from June 24. So the passive tracking trackers, the funds which track the index, obviously the real money passive investors will start coming in from June 24. But that does not mean that nothing will happen between now and then. Obviously, active guys will front run this event, the actual inclusion itself. And you can already see it happening in the market. Yields are down by about 5 basis points. So, and as you know that bond prices move inversely to yields, so which is good news for us as a market maker. We need a wider and deeper market of investors, so that essentially what we trade in then finally can come to rest with the investors. And the investors which we are talking about here are passive long-term investors. They are the best kind of investors. They are not looking to take a short-term view. Essentially, it's a long-term passive investment, which is good news for all dealers/market makers.
Okay, on that note, let's welcome in our Experts as well on the show. We've got Shilpa Rao, Kunal Bothra, Chakri Lokpriya joining in. Kunal, if I could start off with you and let's pick up the trend on PSBs first. Does it seem like this is a durable move? Could it last? Is there a trading opportunity here?
I think we have to be very selective over here, but there are two, three names from the PSU banking stocks which still looks attractive. I think Bank of Baroda is something which we flagged off even in the morning as well as over the last couple of days. Canara Bank is something which has given a breakout above the 365 mark, and SBI. So I would not go for a blanket buy into the PSU banking names. We've seen a very good rally for PSU banking stocks, especially the tier 2 or the mid cap names and the 2-digit stocks. But then I think now it could be a good time to try and move on to the larger cap names. I would still stick to the likes of Bank of Baroda as well as Canara Bank and SBI at current levels. Yes, the rally for these stocks is quite strong, but I think when the market gets into a zone of a bit of risk off, it always makes sense to have more tilt towards the larger cap names, even within the sector like PSU banking.
Okay, so that was about the PSU banking space, but Naresh, it's autos as well, which are doing quite well for themselves. Would you call this move on Maruti a bit of a breakout? Kunal, first you go.
So yes, Maruti I think is a clear case of a breakout, and I think after yesterday's move when the stock managed to hold on to that 10,200 mark, that was a very interesting point of support for Maruti, because that also led the indicators into an oversold territory on the hourly charts. So today's bounce back is not just a relief from the oversold nature of indicators, but it also reinstates the fact that there's a trend in the making for Maruti. Now on the higher side, I would believe that the stock should be up for at least 11,000 kind of a breakout over maybe the next couple of weeks. So would probably expect at least another 500, 450 points upside for Maruti from current levels.
Okay, so that was about Maruti. Shilpa, your view on the market and which pockets do you find the maximum strength in?
Good afternoon, everyone. Market view stays, little negative on the side, because we see that 19,800 is acting as a crucial resistance until and unless we move 18,800 mark. I will see a very aggressive buying coming. We might consolidate and find support at 19,400 from here. So maybe another 200 points of dip from here is a good scope where you can enter for fresh long.
That's a take coming in. Thanks, Shilpa, for that. Chakri as well with us on the show. Chakri, this week has been fairly volatile. Last 3 trading sessions, we have been on the negative footing. Do you think this is a bit of a reversal and we'll go towards probably 19,300, 400 levels? Or do you think, okay, even if we go to 19,300, 400, the long-term or even the medium-term story is still very, very much intact?
Well, indeed, we've had a very good run over the last couple of months, 2 to 3 months. There has been a little bit of profit taking. In spite of that, I think there are more than enough number of opportunities out there, stocks which are still very attractively priced. So that's the way we view it. I think so many of our long-term positions still are intact, and even banking names or even the PSU names, non-banking PSU names, are still, various pockets are still looking attractive, and therefore, and the overall market itself is clearly still earnings are catching up. Multiples are only at about 18 times. So which means there's sufficient room to run.
Okay, let's talk about what's not looking good today, and that's definitely been pharmaceuticals, right? I mean, everything from a Glenmark to a DRL, these are the pockets which are weighing heavy on the markets right now. I can see even an Alchem, there's a Zydus as well, which is a rank underperformer too in today's trading session. So let's just bring up some of these stocks and show you where they're currently at. Of course, this comes in light with the Glenmark Nirma deal as well, wherein Glenmark is going to become debt-free. Brokerages have come out with their notes on Glenmark. I'm not quite sure whether this deal has any bearing on the way pharmaceutical stocks are panning out today. But Kunal, why this sudden pressure? I mean, one would have expected, if at all, a fall in the large cap names, and not pharma per se, which was sort of trying to get out of the woods.
I think maybe, it's just like what, the price action was for ITC. Post the news flow, everyone expected that demerger news for the stock, and post that from 495 levels for ITC, we've just seen the stock going into a corrective mode. It started off with a correction on heavy volume. So my expectation is that possibly this could be a very similar kind of a price action for Glenmark Pharma. But the concern for the stock today is the heavy volumes which the stock has shown today in terms of selling pressure. So today's volume, I think, is one of the highest volumes the stock has shown in the last 4 or 5 months. And in the last 4 or 5 months, the stock has rallied from 400, 450 levels to 800 plus where the stock was trading yesterday. So that generally indicates that this could not just be a short-lived reversal, but it could be a sharper drop for Glenmark Pharma even going forward. So which means that near-term trends for the stock could be on the downward side or at least sluggish, but definitely not look to be bullish on the stock at least over the near term.
Okay, not being bullish on Glenmark at least for the near term. But Chakri, your take regarding the PSU banking names, do you still see value in some of the names or do you think they've run up quite a bit already?
They've all run up, but there's still a lot more to run. If you look at, in fact, today, many of the banks, including State Bank of India, they've all done some infrastructure bond financing. They were all done at good rates, and that places them very well. And also now with the JP Morgan index inclusion, it kind of not only brings down the yields, but also brings the much needed liquidity for the Indian bond market, which is traditionally did not have the kind of liquidity. So all these things are clearly the business catalysts, which will help in further re-rating of the valuation. So Bank of India, Canara Bank, SBI, they all look there's still more steam left.
Right. Okay, that's that on PSBs, but let's just get back to the route that's currently playing out within the pharma pack. Remember, Glenmark Pharma is looking to divest 75% stake in Glenmark Life Sciences to Nirma now. This is the deal that you heard about first right here on ET Now. But today morning, we were chatting with the House of Bernstein as well. And here's a word coming in from Nitya Balakrishnan as to where she finds value within the pharma pack at this level.
Cipla is a relatively well-run company, so we didn't really see any immediate quick wins that they could go after to unlock value. That's probably why Blackstone is maybe backtracking. Torrent, I think the strategic rationale is clear. I think we actually did this analysis of looking at their India portfolios together. And while there is overlap in terms of molecules, what we found was that it's largely manageable in the sense even in the overlapping molecules, one of them have like significantly high market shares. So therefore, it might be easy to either sell the smaller brand or retire the smaller brand. We had called out that it won't be an easy task for Torrent to find the monies that would be required to close this deal. In this specific case, the promoters of Cipla obviously want all cash. Not an easy one for Torrent, which is a smaller company. We have now, in the press, we have now heard of a mix of Apollo, JP Morgan, CVC, Bain Capital, all of them seem to be involved in some capacities. So maybe they're successful, but it's going to be a tough one in terms of how they raise the monies. If the Blackstone deal or the Torrent deal is going forward, I would imagine it's a positive for the Cipla stock. But if either suitor and both the suitors actually fall out of the race, I would imagine the stock will actually react negatively.
Okay, so that was about the pharma space. It's of course under the weather today, but there could be one of the Philips at least that could be there for some of these pharma majors, and that's the PLI scheme that might be extended for some of the drugs. Let's go across to my colleague Prakash to get the exact details on this one. Prakash?
Yes, a big development coming in for the pharma sector. Sources are informing that the government may provide financial incentives for manufacturing of some new drugs under bulk drug PLI scheme, which means ambit of PLI for manufacturing of bulk drug could be enhanced going forward. We are given to understand that the empowered group of secretaries has asked a committee led by CEO Niti Aayog to consider this proposal. After due examination, the committee will take a final call on inclusion of some new drugs under existing PLI scheme. Apart from that, sources are also saying that financial incentives will be given from overall outlay of rupees 6,940 crore, which is earmarked for bulk drug manufacturing. In addition to that, sources are also informing that the government is planning to extend the time period for disbursal of financial incentives under this scheme, which means this benefit will be given for both these schemes. The first one is for manufacturing of bulk drugs, and another one is manufacturing of medical devices. So we are given to understand that the time period for disbursal of financial incentives could be extended beyond a 6-year period. That will encourage companies to take interest under existing scheme. As you are aware that the government has announced 3 comprehensive PLI scheme for the pharma sector in order to boost domestic manufacturing. Rupees 6,940 crore has been earmarked as in financial incentives for manufacturing of bulk drugs. Around rupees 3,000 crore has been announced for manufacturing of medical devices, and rupees 15,000 crore has been earmarked for manufacturing of pharmaceuticals. So it's a big development coming in, and after committee's recommendation, that will be weighted by empowered group of secretaries first, and then cabinet will be approached for its final approval.
Right, Prakash. We'll leave it at that. Thanks so much for joining in. Let's just quickly take stock of what else has been holding out in the market. Of course, it's the PSBs led by Canara Bank, BOB. They're all the ones holding out. There's, of course, Berger Paints too, which is seeing quite the spike up. About a 6% move up is what that stock has been seeing. And then, of course, there's REC as well, which is up about almost 4.5% as we speak. Within the PSU pack, Coal India is continuing to top the charts, still holding up about 1.5% in trade right now. Shilpa, just want to get in on the charts of Coal India because this has been pretty, actively traded off lane and on the upside.
Actually, Coal India is on a very strong, I would say a bullish trajectory where you will see targets of 320 to 330 within no time with a stop loss of 260. It has made a very strong base around 260, 265 zones. So I don't see that breaking anytime soon. And from here, the upside move towards 330 is going to happen. And above that also, if it sustains, you will see 340, 348, 350 zones coming in.
About Coal India, yes, it's been on an uptrend and a bit of a breakout is what we have been witnessing on that counter. But Chakri, what's the view on Maruti? Today, Citi is quite positive. They've raised the target price to 13,600 now. At one point of time, we were waiting for that stock to hit 10,000, but from there, it seems like now the street is watching on for much higher levels. Not a completely new story, but they are talking about how the mix is improving towards sedans and a higher proportion of the, higher end value cars. But your view, do you really think 13,600 can happen sooner rather than later?
Maruti as a stock has been, kind of trading below its normal multiple for quite some time now. So it's given that, they're going to launch these SUVs, which are slightly more margin accretive than the entry-level cars where they have the big market share. So as that happens, you will see the multiple going back up to the 24, 25 times, which the stock usually trades at. And, with their move towards SUVs, they're nearly 55, 60% market share in the entry-level vehicles will help them. I think the stock does well from that perspective because now there are catalysts.
Okay, hold that thought. In fact, let's do one thing. Let's take a breather on the show. But when we come back, we'll discuss more stocks with the guests on the show.
Back with closing trades right here in ET now. Let's just revisit where the closing trades are headed. While we are defending that 19,700 print, but again, it's not like we've not breached that level. In fact, I think I spoke too soon because again, we're sub that mark. 19,688 is where we're currently at. Now, 20,000 of course got taken away a while back, but now what's the sanctity of levels like 19,700 also getting breached?
The next support for the index is 19,300, and I think that's a more credible support. So generally what happens is after the first 3 or 4 days of sharp correction, the market stabilizes for a couple of days, and then if the news flow deteriorates further, then we look at a second corrective phase for the market. So I think in that corrective phase, I would probably anticipate 90,300 to be retested. Now the point of concern for many of the stocks is most of the stocks, like for example ICICI Bank, Reliance Industries, HDFC Bank, etc., many large cap names which were showing signs of recovery, they've managed to come back to a point where the index was sub that 90,300 levels. So which means that there is a higher probability which is getting attached that this time around the Nifty can also try and retest those levels. So the point of concern is the large cap stocks showing signs of weakness and no offsetting sectors. I think other than Nifty IT index, there are hardly any few stocks on the larger cap front which are actually being a lot more resilient. I think that's the point of concern for the markets, and that's why we believe that maybe the next couple of days, even if the indices stabilize, I think it could be a good time to actually create fresh shorts maybe on every intraday rallies.
We're just talking about Coal India, but Chakri, it's not just that. The entire power space has been quite heated, and I specifically want to talk to you about JSW Energy. That stock is higher by 7% today on account of the inclusion that we have seen in the Greed and Fear portfolio as well. GQG had also checked into the counter, but it's run up quite a bit already. Would you be a buyer at all in JSW Energy?
JSW Energy, yes, coming out of restructuring now with a host of number of projects, both in the thermal and non-thermal space. And their debt reduction plans. Stock has done very well, but valuations are still okay given the outlook of the number of megawatts that will be added. So yes, JSW Energy looks good even at current prices.
So that's about JSW Energy, but what about Berger Paints? Today there's a split that happened, and after that volume suddenly picked up, and you are seeing a 7% gain there as well. But paint sector, the fundamentals are not very positive, whether it's the crude prices or the increased competition. What would you say regarding the paints segment as a whole and the companies you like there?
Indeed, you hit all the right points in terms of there is lots of competition and big competition. Pricing has come off, will stay off. Margins for this industry are moving structurally down. So pricing power is moving structurally down. And plus, of course, in the temporary cycles of oil up and down, rock prices up and down will kind of hurt or help. But the multiples that you gave to a Berger and the other companies, Asian Paints, etc., I think will further come off. So I would continue to stay away from paints.
Point taken. So fundamentally, the pricing is shifting away from the paint companies, but one of the levers for them could be the festive season, and in fact, lever for a lot of corporates and a lever for the entire markets as well. At least that was the commentary coming in from Ashish Gupta of Axis Mutual Fund.
I think if we look today, I think whatever opinion polls that we are seeing, it does not seem that election results will provide a huge surprise. We feel that there is a significant degree of consistency that has kept into many of the policy making space. A lot of things have been made structural. So, for example, simple things like the vision in fuel prices, right? So some of these decisions have become structural, have got ingrained in the policies itself. Frankly, to my mind, that is not something we are worrying about.
Okay, that's the take coming in on the markets. Let's just look at what the Nifty Bank is doing, because like Kunal just flagged off, we've already dipped down in the red. So pretty much erased all of our gains there as well. Not just that the Nifty is at the session lows pretty much at 19,676. The Nifty Bank has also completely petered down now and is once again flat. While yes, you've got an SBI, Canara Bank, BOB still latching on to their gains, but the private banking names are the ones which are not quite participating. So HDFC Bank is still down about 1.25%. ICICI Bank still down about 1%. And Kunal, clearly, the weak trend that we were talking about, some of these heavyweight, large private banking names, that clearly persists. ICICI Bank, HDFC Bank, the two culprits for the fall last 2 days, they're still in the red.
Yeah, they're still in the red, and in the last rally, even HDFC Bank, ICICI Bank, they underperformed. But then you had offsetting rallies in the stocks like L&T that managed to do exceptionally well. I think it came back to 3,000 levels. Then you had rallies from the likes of NTPC, Coal India, etc. So many of the stocks, they went into a strong upward move. M&M did exceptionally well, so that was another stock from the auto pack which did pretty well. But then this time around, you don't have too many large cap names to offset the losses in the other large cap sets, the likes of HDFC Bank, etc. And I think that's the point of concern which I was highlighting earlier. Now, this again brings in the point that we could probably be getting into a phase of a further profit booking as well as a further reduction of risk from portfolios. And after such a kind of a strong rally in the mid caps, we've just seen a marginal correction to the mid cap index and small cap index. So that should also probably try and go into the second leg of downtrend. So net, I would probably believe that 90,300 could be retested in the next week or so.
Okay, 19,300. That's what Kunal has been talking about, and almost a 700-800 point lower from the current level when it comes to the Bank Nifty, because that too has moved into the red as we speak, and so does the rest of the market as well. But Chakri, before I let you go, last word on IndusInd Bank. There was a UBS note this morning talking about the quality of earnings improving. The stock has actually managed to outperform its peers. I mean, the likes of Axis, ICICI, etc. But IDFC First, that's been the stark outperformer and the leader with a 58% gain this year. Between IDFC First Bank and IndusInd Bank, if you had to choose, which would be your favorite?
IndusInd Bank is probably an easier name simply because, their problems are lesser to fix. And all the company needs to do now is, yes, they're moving towards more retail loans, changing their deposit mix. And all that is to basically help its margin profile improve. Now, if that happens, along with that, it's for the stock to re-rate further from here on, I think the credit costs need to come off. And if you're somewhere close to a peak of interest rate cycle, that also might aid. So I think it's IndusInd Bank.
We let you go on that note. Thanks as always for joining in. Kunal, let's have your closing ideas.
So I think from the closing trade, Ultratech Cement is something which I would go for a contra buy. The stock has been beaten down in the last 5 days from 87.50 to 8,200 where it's trading. So it looks to be oversold indicators, and would expect a decent bounce from current levels.
Okay, on that note, let's take a very quick break. It's getting a little brittle out there. We are at the session lows for both the Nifty as well as the Nifty Bank. We'll track the last half an hour of trade this week on the other side.
Welcome back. Well, it doesn't look very pretty at all. There was an attempt made to recover to that 19,800 mark, but again we have fallen below even 19,700 and now trending lower as we speak. So there's no buying on dips, at least for the moment. Having said that, the Bank Nifty seems to have stabilized a bit. It's just around the flat line, and it's been taken higher by, again, the PSU names as we have been flagging out. Bank of Baroda, PNB, SBI. These are the names which are doing quite well for themselves, but HDFC Bank, that continues to be a drag. In fact, let's pull up the week-to-date chart if we can of HDFC Bank. It's not a week that, the investors would want to remember, because every day we have been seeing a decline, a cut of almost 8% on the heavyweight HDFC Bank for the week gone by. But let's welcome on board Shubhani Sarkar Kurian as well. She's joining us to talk to us about the fundamentals of the markets. Shubhani, hi. Let's begin with PSU banking space itself, because that's the most... that seems to be the flavor right now. Which are the names, if any, that you can talk about which look still very good? Will you stick your neck out and talk about only the large cap, PSU banking names, or is it getting a lot more wider?
Hi, good afternoon. While I can't, talk about specific names, but let's discuss the PSU banking pack as a whole. So if you look at what's been happening, not just today, but over the last year or so for most of the PSU banks, is that there has been, and given that there has been tailwinds in the overall banking sector as well, there has been improvement in terms of profitability as you measure in terms of return on assets for the bank. The second most important factor is that we are now in a scenario where credit costs have been extremely benign. And then together with the news that has come in today in terms of the bond inclusion, the fact is that overall it does look that from an interest rate perspective and bond yield perspective, there is the much needed downside support that has come through. So all of these factors are resulting in the re-rating of many of the public sector banks, especially given that they were trading at very, very low valuations in terms of price to book. Now, from here on, the way we are looking at the space is that we need to look at banks where there is still possibility for return ratio improvement, and also banks which are able to protect their market share. Now, in the near term, if bond yields remain benign, there will be the element of the trading or the investment gains that come in, which can help in terms of profitability. But from a core profitability perspective, we will clearly focus on banks which are showing ROA improvement going into FY24 and FY25. And that's where you will still see momentum or still see possibility of re-rating in terms of multiples. So here our focus will be towards the slightly larger PSU banks, given their ability to defend market share, as well as their ability to raise capital, which will again help in terms of loan growth as well as deposit growth. So that's how we are looking at the entire PSU banking pack.
Take on the PSBs. Let's just see what the entire consumption pack is up to. And, typically you would start off with the auto names. They're sure the ones which are actually holding up quite okay in trade. So be it a Maruti, that's looking strong. You've got an M&M as well, which is seeing a bit of a bounce coming in. And that's pretty much the case across the auto pack. Even a Hero MotoCorp is decent enough, about a 1% uptick or so. Shivani, very soon it'll all be about what the festive season color is like, right? What is your anticipation, especially when it comes to the auto sales and the demand revival there? Because it pretty much, covers across spectrum, everything from rural demand to CVs and even, the urban PVs.
Yeah, so let's look at autos maybe to say three packs, which is the PVs, the CVs, as well as the two-wheeler pack. Now, within the entire space, what we have seen is that the commercial vehicle segment had seen growth pick up, and we expect that overall, as long as economy continues to grow and you see infrastructure activity pick up, the CV segment should remain fairly robust. Within the CV space, of course, there can be different segments which do better than the others, but overall, we expect that the growth on the CV space should remain fairly intact. The second comes the passenger vehicle side. Here again, while growth has picked up, there is dichotomy in terms of the segments which are performing well. Clearly the premium category, the SUV category continues to drive growth, while at the bottom of the pyramid, the lower end segments are lagging behind. And that's where again the element of the bottom of the pyramid demand or rural demand comes through. So going into the festive season, it will be important to watch out for two trends in the passenger vehicle space. One, of course, the sustenance of the demand, especially where premium category is concerned. And do we also now start to see some improvement at the bottom in terms of the rural demand or the bottom of the pyramid demand coming through? So that's the PV segment. On the two-wheeler side, we have started to see initial signs of recovery. But here again, it is the premium two-wheeler segment which has seen improvement because of the recovery and the demand recovery that has come through. And again, here the rural demand coming through will be an important determinant for the overall growth coming back within the two-wheeler segment. Now, the initial signs and the kind of conversations that we are having is that the expectation is the festive season should see some pickup in demand. But of course, we'll wait and watch. For us, we believe that the auto pack is fairly well placed. As we said, there are pockets where growth remains strong. Margins improving because of lower commodity costs continues to play out. And therefore, in terms of our portfolio positioning in the auto space as well as the auto ang space, we continue to overweight.
Okay, so that's the take coming in as far as the automobile industry is concerned. But Nuresh, or rather Shilpa, tell us about Wipro as well. That stock is seeing a bit of a cut today because of the leadership change that has happened, the sudden resignation of Jatin Dalal, the CFO. But would you buy that dip at all?
No, I would like to wait out a bit because Wipro now trading below 420 is a little cautious because you might see a dip towards 408 to 405. So I would buy on declines to 410. That would give me a better risk reward ratio for targets of 445 to 460. Position rate is intact, but on dips buying is much more recommended.
Okay, so that's a take on Wipro, but let's go across to my colleague Anurag to get the latest as to what's happening with respect to surety bonds, because we understand that the finance minister has met the head of insurance companies. What was discussed and what are the key takeaways, Anurag?
So last year's budget, a surety bond was announced by Finance Minister Nirmala Sitharaman, but we have seen that in last 1 year the surety bonds has not picked up, and government want to put a surety bond as an alternative to bank guarantee for infrastructure projects. So recently Finance Minister Nirmala Sitharaman has met insurers to discuss the developing surety bond thing, because government want to push the surety bond, and in that meeting Transport Minister Nitin Gadkari was also present. So government just want that more and more companies to come up with the surety bond products, because in next 5 years we will see around 100 trillion rupees of infrastructure projects will be coming in, and it will require around 90 trillion rupees of bank guarantees. And as of now, there are only 2 insurance companies has developed their surety bond products, and for bank guarantees it's very difficult for infrastructure companies to get the bank guarantees of large size, and NHAI has also complained about not getting bank guarantees for their infrastructure projects. So in this regard only, government want to push for surety bond, where insurance company will cover the project if any kind of default or non-completion was happened. And recently IRDA has also curbed the made the norms easy by reducing the solvency for surety bond products. So the purpose of the surety bond is to boost the liquidity for infrastructure and housing projects. So after this recent meeting, IRD has also come up with a note explaining the importance of surety bond and how insurance sector can collaborate for infrastructure financing. So in coming days, we'll see that the large number of new products will be launched by insurance companies, because government will also want to push the surety bond for infrastructure projects.
Right. Okay, Anurag, we'll leave it at that. Shubha, if I could just get your thoughts on the insurance sector at large, right? Because it hasn't been that much of a hit with at least equity market participants as one would have thought in terms of how intact or how strong the long-term trajectory for insurance sector in India is, given that, you know, it's at a minuscule and a very nascent penetration stage in the country. But that said, do you think right now is the time to build up a portfolio and get in some insurance stocks in there?
Yeah, absolutely. You're right. When you look at the structural growth opportunity where insurance is concerned, whether it be life insurance, health insurance, or even any of the general insurance categories, given the kind of penetration levels that we have, we do believe that the structural growth story is fairly intact. But remember that the insurance space, especially over the last few years, has gone through significant amount of turmoil. So starting with COVID, which impacted most of the insurance players, then subsequent to that, we've seen a lot of regulatory changes and the tax changes which have impacted growth in the sector. But I think now that the sector, especially where life insurance goes, having gone through such a lot of turmoil in the last few years, both because of the external COVID situation as well as regulatory changes and tax changes, I think now the sector seems to be settling down. If you look at the monthly data that is coming out, what is clearly evident is that APE growth, especially on the retail side, is starting to inch back. And therefore, there are signs of growth coming back. Our belief is that, one, the market share shifts towards the larger life insurance players will continue. Secondly, from a protection perspective, again, a segment which got impacted, protection growth seems to be coming back and pricing has now more or less settled, and that is also aiding growth coming back. And this year, if you look at what happened all of last year, a lot of the VNB growth that insurance companies reported was on the back of margin improvement. However, this year, APE growth is going to be the key driver. And therefore, if growth does come back over the next few months and we start seeing signs of that, the valuation, especially where life insurance is concerned, appears to be fairly attractive. So therefore, this is a sector that we would incrementally start evaluating given the growth valuation dynamics.
Hold that thought. Let me also flag out some of the stocks which are, buzzing around on high price volume action. Berger Paints, of course, has been advancing for fourth consecutive session, has hit a record high today, and the volumes are 5x the 20-day average as we have seen recently. And as we pointed out, there was a split also that happened today, so there's a bit of impact there. Canara Bank has hit a 5-year high on an intraday basis. It's forming a bullish belt hold candlestick pattern and has been advancing for fourth consecutive week. And then, of course, we have Indus Towers, which is seeing quite a bit of positive, build up as well. It's up around 3%. In fact, talking about Indus Towers, let's go across to my colleague Sharad, because he's been working his phones and getting the sense from the dealing rooms as to why there's a lot of interest in Indus Tower today. Sharad?
Well, yes, in focus, we're having Indus Towers, and the stock has snapped its 3-day losing streak, and the stock is up more than 3%. And now what we are hearing from the dealers is that marquee HNI investors have been buying stake in the company. Now, apart from this, also the volumes, if you look at it, that's coming at almost 2 times its 30-day average. And one of the major triggers for the stock is the debt receivables coming from Vodafone Idea. Also important trigger is that companies exploring other new geographies, especially in the 5G and the fiber space as well. And also the company will be meeting HNI investors in the JP Morgan Investment Summit, which is scheduled to happen on September 25. Now, the brokerages have stated that the company itself is a good play on the dividend front, as well as the valuations are attractive. Recently, Citi also came out with this report giving a buy rating and a target price of 230 rupees per share.
Point taken, Sharad. Kunal, your take as far as Indus Towers and Vodafone Idea is concerned on the chart patterns?
So idea I'll not look to trade or recommend because I think it's a bit of a volatile kind of a stock. I think IndusStar is something interesting. The stock has given twice breakout above its 200-day moving average, and I think that was close to 167, 168 for IndusStar. The stock moved up towards 187, 188 mark, I think a couple of weeks back, and then mild correction came back towards 175, and this is the second attempt towards this 187 mark. Now in the second attempt also the stock has been holding on above its 200-day moving average. So I think that's a positive sign for IndusStar. Volumes coming back, momentum, coming back into the stock price, holding on to the previous resistance point, and that is acting as a support for 200-day moving average for IndusStar. I think all of that is attractive. That 167 odd mark could be kept as a stop loss or a support for this stock at current levels, and I would probably expect that in this phase of the rally, the stock may not just break past about 187 mark, but probably try and scale past about the 200 psychological levels as well.
Right. Okay. That's the take coming in on some of those telecom players. Today, of course, IndusInd Bank, Maruti, SBI are the ones which have led the charge. That's not quite the case with the IT names or, for that matter, pharmaceuticals. So DRL, Wipro, Cipla, they are the ones which have which have been languishing in trade. There's, of course, HDFC Bank, Titan, ITC, ICICI Bank, and they have been large laggards in trade. The Adani names though, Adani Enterprises, Adani Ports, and I think they started off the day in the positive, and from there they've seen a cool off. Kunal, you had a call on Adani Ports earlier today, right?
Yes, I still maintain that stock. So even though it's down 0.5% or so, the price action on the FNO is very, very attractive. The stock is still holding on to the premium in the October futures. I think 836, 837 is where the October futures is for Adani Ports, and I think looks attractive because the stock is holding on to that price level of 35 approximately, as well as yesterday or day before support that was around 820 odd mark.
Okay, point taken. Shibani, there's been a lot of action of late in the primary market, right? Slew of IPOs happening. Even if you look at the stake sales in terms of QIP as well as OFS, that's also ramping up. A lot of private equity exits as well. How are you reading it? Is it the case that the promoters are looking at exit and making that quick buck, or do you think that there is enough demand and that's why they are taking these calls?
So I think, the way I would look at it is when markets are buoyant, many companies which would possibly want to raise capital come to the markets and make use of the buoyancy in the market. So that could be one of the reasons. What we've also seen is that in many cases, certain private equity firms which would have been invested in some of these companies over a period of time come to the market looking for an exit. So that could be the other reason. So typically when markets are fairly buoyant, you see pickup in activity as far as primary markets are concerned. So for us as well, when we evaluate various IPOs as well as any of the primary market deals and issuances that are there, so a couple of things that we continue to watch out for. For us, understanding the business of the company in terms of its market leadership or the ability to scale business becomes extremely important. We are continuously focused in terms of balance sheet and cash flows as well as quality of management. And then, of course, overlay all of that in terms of the valuations at which the IPO is coming through. So it's very important to look at each IPO on its own merit and then take a view on the IPO space. But as I said that, whenever markets are buoyant, you see significant amount of flows and liquidity. It is not natural, and it is something that has happened in the past as well, where a number of companies, either for their own expansion purposes or for raising capital, or even some exits with some of the private equity investors who have been there for a long term, seems to happen, and that's what's happening at this point in time in our markets.
Okay, that's the take coming in on all the IPO flurry that one has been seeing. Just looking at what else has been holding out in the market and what's not. Berger Paints, of course, there's a bonus issue, which is why you're seeing this elevated move on the stock price. PSBs, the smaller ones, are looking quite okay. There's REC, Granules. They are the ones which are actually holding out in trade. Just want to bring out a set of other movers as well. There's Idea, like Anisha flagged off. There's PFC. RBL Bank is not doing all that bad at all. And then, of course, there are names like an MCX, L&T Housing Finance, Bandhan Bank, which which are also holding out quite okay. There's Petronet LNG, Sun TV, LIC Housing, Apollo Hospitals, or Apollo Tyres actually, I stand corrected, along with Balkrishna Industries, if I just want to extend that list. Shilpa, tactically, would you want to steer clear of sectors or companies which have high crude raw material exposure?
Yeah, on this junction, I would say yes, since it is looking little, little indecisive, and the counters are also having no clarity on the trend. So I would definitely recommend staying away from their those scripts. Apart from that, we have many other opportunities in the market where you can venture now and stay put and enjoy the gains. Every day we get ample of number of opportunities. Like now, if we talk about, we see granules is up around 4.5% right now. But if you see, granules is also holding very well, and it is consolidating, and it is actually breaking out of the consolidation zones of 338 now. A past move above 338, we will see a massive short covering rally from here towards 400. Today also we see very high OI build up there. So I believe granules is one stock one can focus right now, and a good targets towards 380 to 400 is on cards.
Shivani, my question is to you now on, and just flagging it off from some of the tire names which are actually holding out well in trade today. Tactically, does one stay away given that, crude also has seen quite a bit of escalation in prices from sectors which have crude as a large component of the raw material cost?
So specifically, if you're asking me on tires, you are right that there would be some impact on margins because of the RM inflation that you are now starting to see. But also remember that on the growth side, a lot of the growth seems to be coming back, especially in terms of replacement demand, which we have seen either in the CV space and to some extent now in the passenger vehicle space as well. So from a tires segment, while we will keep a close eye in terms of what's happening on the crude as well as on the raw material inflation and its impact on margins, it will also in this context be important to see how competition is on in terms of pricing. Therefore, if companies are able to pass on some of the impact on pricing, margins will still stay intact. But on the growth front, in terms of replacement growth, some of that replacement growth seems to be coming back. So overall, if you look at the auto anch pack, not just tires, one is that we've started seeing demand stability coming back and coming through, replacement demand also coming through. And therefore, in pockets of the auto anch space, we have been fairly positive. Of course, we'll keep a close eye in terms of how the RM inflation or the raw material inflation pans out over a period of time. Now, where crude is concerned, it is possible that crude does stay elevated for some time, given that a lot of the rise that you've seen in terms of oil prices is led on by supply constraints and the supply side dynamics taking over. Demand continues to remain fairly muted. So across the world, and including China, demand is fairly muted, and therefore it is possible that while crude stays elevated, it may not breach or may not significantly go up over the $100 mark and stay there for a long period of time. But of course, the supply-demand dynamics is something that we will have to watch out for.
That's a take coming in as far as crude and its dependents are concerned. But Hudco is one stock which is doing quite well for itself, 19% gain coming in there. Century Textiles has perked up in the last few minutes. What's your call, Kunal? Would you look at buying either of these names or just stay away and not understanding the move as to what's happening there?
Yeah, it's difficult to comprehend this kind of a breakout move, but the charts for Hudco specifically, it's not a one-off move that in the last half an hour, last 1 hour, that there's been a good spike in volumes and the prices have moved up higher. It's been a calibrated buying throughout the day. I think right from the start when the stock opened at 72, 73 odd mark. From there on, it's been a consistent buying for the stock price, which means that this could be a trend breakout stock for the stock, and I believe breakout move for the stock, and I believe that this could actually result into a follow-through up move. So what could only happen is that if the markets get into a further correction mode, you might see the breakouts getting a bit stalled. But then such kind of moves which come back on extremely strong volumes, they do see a follow-through. If not in the next couple of days, largely over the next couple of weeks, I think these stocks should see a follow-through up move.
Okay, A couple of other newsmakers, Zentek just bagged an order, so that stock understandably so is higher by around 5-6% the last time I checked. You also have Ratnamani Metals. They also had a positive news flow today. Having said that, Macrotech Developers is seeing a bit of a slide, and ditto could be said for a couple of other cement names. Nuvoco Vistas is down in the trading session, and some other names are also in the red right now. But time to get some BTST trades from our chartist. Wondering whether it's going to be BTST or STBT, Kunal?
I'll go with two buy calls. So the first one is a buy on MCX. The stock apparently has been holding up pretty well at the 1770-80 mark. I think even yesterday the stock managed to outperform. It's forming a bullish flag pattern on the daily chart. So would suggest a buy. 1860 as a target. Stop us at 1720. And granules is the stock which we discussed in the morning as a chartbuster idea. Looks very attractive at current levels. The stock has confirmed a breakout even on an intraday basis about the 335 mark. So would suggest a buy. 355 as a target. Stop loss at 323.
Right. Shilpa, any BTST or STBT ideas from you?
I have two BTSTs as well. One would be on Oberoi Realty. It might look like a contra call right now since it is down by 1% now. But I believe this 1100, it has a very strong support base. So with the stop loss just below 1100, one should look for targets of 1170 from here. The other one would be a buy in Hero Motorcorp. I believe Hero is holding on very well here. So with a stop loss of probably 2980 from here, one should look for targets of 3080 to 3100.
Right. Okay, Shilpa, we'll let you go on that note. Shibani, you too. Thanks as always for taking the time and joining in. Kunal, before we let you go, a quick Nifty as well as Bank Nifty strategy, assuming globally over the weekend nothing goes all right.
So yesterday we indicated that to carry forward short positions on the indices, both the Nifty as well as Bank Nifty. I think now at this point of time, at least for as a BTST trade, I would not look to initiate fresh longs or fresh shorts. So I think it's a good time to square off the position. Wait out for a bounce back on the indices, both the Nifty and Bank Nifty. Maybe if 19,900 gets to be seen on the index on the Nifty as well as 44,900, 45,000 for the Bank Nifty, that could be another point where we may look to initiate fresh shorts.
Okay, let's just move on and let's just mark some of the rates as to how we are shutting shop for the day. We've been talking about as to how it's, banks which were really the saving graces today, PSBs. The Nifty though is closing pretty much around the session lows at that 19,677 print, a downtick of about 65 odd points. Pharma, Nokri, Astral, Zydus Life, SRF, Wipro, Lupin, ABB, these are all your rank underperformers in today's trading session. And of course, a lot of it has closed in the green as well, like an IndusInd Bank, like Maruti, SBI, Tata Consumer, M&M, Hero Motorcorp, and even TCS and TechM for that matter. Berger Paints, with that bonus announcement, Can Bank, REC, BOB, Granules have managed to close in the green. From within the liquid universe, and by the way, there as well, the breadth of the market took a hit and we've closed in the red. Besides Glenmark, there's been a Zydus Life, Alchem, etc. as well, which have also been the laggards. So pharmaceutical definitely was one of the biggest drags. And then, of course, there was capital goods, infrastructure, cement, power, real estate, and even technology, which sectorally has managed to close in the red. Telecom, banks, financials, and to some degree autos, they were really your saving graces in trade today. That's pretty much it then for this week. We're going to wind it up right here and we'll see you with all the market action on Monday morning.